So I've just spent the last hour or so listening to Jeremy Hunt deliver the Autumn Statement 2023 to the House of Commons. And I think there's some really, really interesting stuff here, specifically for investors. But we'll go on to that one in just a moment, because I think there's some really key things here, especially around clarification on things that weren't actually mentioned in the House, but are mentioned in the Autumn Statement document itself, which I will pull up on screen very shortly, all 120 pages of it, which I haven't read fully, but I have skimmed through some really, really important points and highlighted them. But firstly, let me just go through a couple of the headline points, which you would have seen on the likes of the BBC and other of the news outlets at the moment. You would have seen the current national living wage be increased from £10.42 for 23 years and over, now moving to £11.44, but also applying to 21 and 22-year-olds. Just to give you an example of this, what it actually means from a full-time perspective, in 1,823 hours in a year, a current 23-year-old will make £18,995 in gross, so around £19,000 a year. Now, a 21-year-old and above will make £20,855. That's an increase of around £1,900 for a 23-year-old and £2,300 if you're 21 and 22-year-olds in work. So quite nice there. However, there's always a downside if you do earn more. So to put that in perspective, those gross figures will be reduced by being paid more tax as well. So 21 and 22-year-olds will pay £460 additional tax, and 23-year-olds will pay £380 additional tax. Now, I wanted to highlight this from a tax perspective because we're hearing a lot about tax cuts in this budget, and also there is a tax cut to national insurance moving from 12% to 10%. And all of this does sound good, and all of this will potentially mean more money in your pockets. However, because the tax bands remain the same and have remained the same for quite a long time, lots of people are being affected by what's called fiscal drag. Now, it sounds complicated and really isn't that exciting, but effectively it means that more and more people are finding themselves paying more and more tax because what they earn, even if it's just going up by inflation every single year, the tax bands remain the same, yet more people, for example, are being pushed into the higher rate and more people are being pushed into that basic rate than ever before. Let me just show you a video from the Guardian's website, which kind of goes through this as a bit of an animation that shows over the last kind of 20, 30 years or so from the 90s, millions more people are actually in the higher rate tax bands because the tax bands haven't really been adjusted with the likes of inflation. So this is commonly referred to as a stealth tax because many people don't necessarily focus on this and they kind of ignore the fact that more people are paying taxes than ever before, which is quite an interesting one to focus on. So you will see this one on screen now and see how these numbers have increased. Now, just briefly touching on inflation. Now, Jeremy Hunt brought this one up, claiming that the government has managed to halve inflation, which is just an insane claim, and it just makes absolutely zero sense. Apparently, because energy prices have fallen, therefore it's the government to take responsibility of that. That is just an absolute complete BS in my view. It's just absolutely crazy. The government have no control over energy prices and the global pricing of energy. So you can ignore that one, and now they're claiming that they can therefore spend loads of money. I think in reality here, we're seeing lots of electioneering here for government, which needs to have a general election sometime next year before the end of December. And I suspect they're probably going to announce a general election, probably sometime early in the year, or maybe even at the start of next tax year as some of these things come in, because they're going to claim that lots of people have been affected by the tax cuts and will have more money in their pocket. As you may or may not know, the current government is forecast to be losing many, many seats around the next general election, with the Labour government having a huge majority, pushing them into kind of uncharted territory, back to the landslide days of kind of 1997 and beyond. So I do expect some of these changes potentially to not even be enacted and maybe won't even spend a huge amount of time being put forward. Now, there was some interesting stuff here around good stuff around business investment. There was the rise from a pension perspective of 8.5%, and there was benefit increases of 6.7% in line with September's inflation figures, claiming that 5.5 million households will receive around £470, and increasing housing allowance rate. Again, they claimed 1.6 million households will get £800 worth of support. And also good old electioneering. They said alcohol duties frozen until August next year, beer, cider, wine and spirits. Great. So you can save a few p on there, which will definitely mean you'll go out to the pub. Now, for us investors, I don't think the most interesting stuff was actually announced in the House of Commons today, but it was actually in the document, which you'll see up on screen now, the actual autumn statement, which delivered 120 pages worth of different reforms. Now, on page 95 that you're looking at right now, under the personal tax and savings section, I've highlighted some of the most interesting things. I think we've got some really good news here. So positive news as investors that we have to look forward to in terms of the next tax year. Let me just start from the top here, which I think will really change things. And actually, I'll have to do lots of different video updates going through these. Point 5.38 here, allowing multiple ISA subscriptions. The government will allow multiple subscriptions to ISAs of the same type every year from April 2024. So this is huge. So many of you will know at the moment, the current rules around ISAs is you can open one account per tax year of each kind, and your limit to contribute to those is £20,000. So for example, in any given tax year, you can say, right, I want to open a stocks and shares ISA, for example, with Vanguard. But the moment you put new money into that one, so new money, you might contribute from your payslip, or you might just had £1,000 sat there, for example. That means that you can't open another stocks and shares ISA until the next tax year. You can have old ones sat there, you can transfer around, but you cannot open a new one. Now, this would suggest that basically you can do whatever you want as a free-for-all from next April. So it looks as though, without seeing the actual details here, that you can open as many cash ISAs, as many stocks and shares ISAs, and potentially lifetime ISAs as well as you want. But the limits will remain the same, but I'll go on to that one later on. So this could be really an interesting one. Now, I think this will be really positive and increase the competition in the space because, for example, you might say, I want a stocks and shares ISA, which has just some individual stocks in. You might one with majority, for example, might be index funds, and you may use another broker which offers different things. Because as you know, and I've done lots of reviews on these, different apps and different platforms will allow you to invest in different things. So for example, some will only allow you to invest in ETFs and index funds. Others, you'll get the full choice. And others, you might have fractional shares, for example, which is another topic I'm going to move on to. So I definitely welcome this one. It may cause people to complicate their investments somewhat. So there will be kind of pros and cons, but I do think this one's positive to look out for that one. And just leading on from that one, allowing partial transfers between providers. This again could be interesting to really tailor your investment portfolio to how you want it. Could make things more complicated for people that don't really know what they're doing, but for those of you who really want to tailor it, I think that's a good one. Now, moving on to the really, really important one here, which lots of us wanted to get clarification on and lots of us are being concerned about, it's point 5.43. Allowing certain fractional shares contracts as permitted investments. The government intends to permit certain fractional shares contracts as eligible ISA investments and will engage with stakeholders on implementation. So not much detail here, but it looks like we're going to get clarity that fractional shares, as they're being held at the moment in certain platforms, are going to be absolutely fine to be held in our stocks and shares ISAs. There was some kind of scare story put out there, and there was a claim by HMRC that fractional shares held in ISAs were not eligible because the law did not actually allow fractional shares, because when the law was written, fractional shares didn't exist. There was a bit of an uproar from investors and lots of these newer platforms which allowed fractional shares to be bought for over the years in their stocks and shares ISAs, that they would either be taxed or sold or something like that. People like Interactive Brokers put out a message saying that they were going to halt trading of fractional shares, for example. And Interactive Brokers, if you didn't know, are actually the kind of custodian for some of the other platforms out there as well. So this looks like we've got some good clarity. We are short on detail here, but I think this is really positive moving forward. As many of you will know, if you can't buy fractional shares, you end up really in a situation where your investments are limited, and those with smaller amounts of money might struggle, for example, to either buy shares of an ETF or shares of a company. So just picking a company out of thin air, Nvidia, which is what, $500 for a share at the moment, would mean that you would have to save up $500 exactly to buy a single share. With fractional shares, you can put £50, £100 in whatever, and you'll get a fractional share of that one. So I think that's really, really positive, and actually really can class as breaking news here that this fractional shares looks to be okay. So I know a lot of you are concerned that one. As soon as we get any more details, I will do an update video on that one, but that I think is really, really positive. Now, a couple of things here. So I've just highlighted in blue here. The ISA limits look like they're all going to remain the same. There was some talk about ISA limits potentially be moving from £20,000 to maybe £30,000 or something like that. But at the moment, it looks like they're just going to be staying the same. So that's £20,000 across all of your different ISAs. And important as well, I don't talk about this much actually, but it's worth reiterating. Junior ISAs, 9,000. And then your lifetime individual saving account also remains the same. So that's the one which you can use to buy a first house or for retirement. The £4,000 remains that limit as well. And child trust fund too, which is quite interesting. And finally, something I misspoke about in my latest Vanguard update, the lifetime allowance will definitely be abolished for current pensions. And this has been a concern for people who build up quite a sizable pension pot over their working career. where the current issue was your lifetime allowance was just over £1 million, which some people were facing and then worrying about big tax implications after that. So as they announced from the Autumn Finance Bill in 2023, the lifetime allowance is removed. So good news for those of you who do have sizable pension pots that you might have built up over many, many, many years. So in conclusion, what are my thoughts? Good, bad, ugly? Well, I think there are some positive things here, especially around fractional shares. I'm a big fan of making ISAs simple. And I think we might see some more changes when it comes to ISAs, and whether that means that we can, have cash and stocks and shares in a similar one. Anything we can do to make that simpler and easier, in my book, is good. Now, on some of the other things, I mean, a lot of it is just really politics, unfortunately. I don't want to get too much involved in that one. But claiming that inflation has been halved by the government is just completely ludicrous, just because energy prices went down. When you actually look at what caused inflation and the actual effects of different sections of the economy and how it affects inflation, saying that you've halved it because energy prices came down, which is taken out of core figures, is just insane. So we can move over that one very quickly. Fiscal drag, I do think, is a really key one, and the kind of stealth tax that it implies, with more and more people being brought into higher tax bands because the tax bands don't change. You can reduce national insurance or potentially reduce income tax percentages down, but if your pay moves up, you can still end up paying the same, if not more. So that's a really interesting one to look out for and just be careful of that. So that's something you have to be aware of, and I don't think most people in the country are aware of what fiscal drag actually is. And in summary, one of the final points that I had written down in front of me was kind of saying that, look, a lot of this, remember, is going to be electioneering. So I think the bottom line for us as investors and savers potentially is really just to do what we can do and control what we can control. We have no idea if the next government, which is likely to be a Labour government, will follow through with a lot of these changes, will abolish these changes, and they can really do what they want moving forward. So as investors, all we can do is play by the current rules and just make sure that you control what you control in your own life. That really is spending less than you make, all the basic stuff. That is trying to improve your income, reducing your outgoings as much as possible, and saving and investing as much as you can that meet your own goals. And really, that's all you can do. But generally, some interesting stuff here. I would say for me personally, the stuff that wasn't mentioned was more interesting, and really, I'm really pleased with the fractional shares that have come out here, that we are going to look like there'll be everything okay. We are short on detail, so who knows if we're going to miss out on some things. But overall, I'm happy with that, where we are at the moment. But who knows where things are going to go next year. Anyway, if you found the video useful, please do drop me a like. Comment below, what are your thoughts on the latest autumn statement? How will it affect you? Maybe you run a small business as well. I'd be very interested to hear from you and get your thoughts. Let me know below, and I'll see you in the next video. But as always, happy investing.